From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. As Carl Rodder from Capital.com told me earlier today, we are relearning how to live in Trump's world. And once again, similar to what we saw in his first presidency, a lot of what he says hits the news headlines as we start trading. So today it was that flagging of the potential of China tariffs of 10% to come in from the 1st of February. We did see some pullback coming through in our mining players, but a good start to the session. Then a little bit of a wobble in the afternoon, but we've still closed higher by 0.4% there on the CBO 200, the ASX 200 up 30 points or a third of 1%. And of course, it was tech really leading the gains, because the other thing that Trump announced overnight was that AI infrastructure build expected to create billions. We've got, of course, the joint venture with OpenAI, AI and SoftBank to build this artificial intelligence infrastructure in the United States. So when it comes to the themes of the day, certainly the miners getting a bit of a wobble as we saw Trump talk tough. But remember, he's also flagged these potential 25% tariffs on Canada and Mexico. And Canada is actually the biggest supplier of uranium to the US market. So our uranium stocks got a very good boost today, including the likes of Boss and Paladin, which also came out with an update. And then betting on the Aussie, this is really interesting. Citi coming through with a call that they think the best way to really play what they think is an imminent pullback in the greenback is to buy the beaten Aussie dollar, which is tracking around 63 or just under cents at the moment. All right, let's have a quick look at some of the sectors of the day. We mentioned tech stocks, certainly the front runners. WiseTech up more than 3%, NextDC up by more than 2%. The banks, having a look at them, also a solid front runner today. CBA was up by another 1%, just under $158. ANZ, NAB and Westpac also moving higher along with Macquarie. Of course, the miners being hit by these concern about tariffs on China and some weaker movement in iron ore. Fortescue is coming through with an update tomorrow. It was down 1% to $19.11. To the corporate stories, I mentioned Paladin coming through with an update. It's reaffirmed its production guidance for full year 25, shares up by 10%. Boss also soared on this hint that there could be a 25% tariff on Canada, the US's largest foreign supplier of uranium. Woodside, now its year-on-year revenue has slumped, but we also heard from Meg O'Neill, the CEO, telling the AFR that they are actually going to move out and back down on some of their clean energy projects. This, of course, has been a movement that's been growing over the past several months, reinforced by Trump 2.0. Hub also came through with a quarterly update today, sending its shares up by 4.4%, and Bell Potter raising its price target on the stock. And Bubs had a great day, the infant formula maker surging after it returned to profitability, driven by growth in both the US and China markets. Let's welcome to the COB Mark Gardner from MPC Markets. Hello.
Good afternoon.
Now, first time I've spoken to you since we've seen the new president, or the old president, come back again. I guess today really a lot about these AI winners.
Yeah, absolutely. And I think it'll essentially be very much a picks and shovels play. I do agree with the uranium move, particularly. I think they're hitting I think it's very short-sighted looking at the resources sector here at the moment, because the net importer ends up being the US. If they are the biggest steel importer in the world. So they're either going to get it from Japan or they're going to get it from China, and we ship to both. So I think that's incredibly short-sighted hitting that resources sector, today on the back of reduced China demand. China's likely to have stimulus this year. All of these companies have got, they're all scrambling for copper at the moment, obviously, and as we saw with the Rio Glencore, and obviously BHP, trying to buy out Anglo earlier in the year. I mean, these guys look 10 years in advance, or more quite often, and they've been actively scrambling for these copper resources and seeing this demand coming through. Because now we've got competing thematics now with the energy transition, which probably will take a significant back seat. But everyone was really disappointed with the China bazooka. But I mean, anywhere up to 800 billion Aussie dollars in. I mean, that's a pretty big bazooka coming from Trump. I dare say the reason that they probably wanted to place them in Texas is that excess natural gas supply to probably as a stopgap solution for the power there. Because obviously nuclear takes a while, and small modular reactors not quite ready yet. But obviously, because Atomprom's had issues, Cameco's had issues in Kazakhstan, and then Canada's the other bigger. So Australia, and I said this a couple of times last week, Australia, we're in this really unique sweet spot where both sides of any trade war is going to need us for iron ore, for critical battery minerals, for uranium, and obviously for gold for those who are worried about the fall in the US dollar. And I wholeheartedly agree with Citigroup's assessment that the US dollar is sort of sitting up there on patriotism at the moment, but we're talking about a lot of spending from Trump at the moment. That's not going to help the US debt, and that just keeps spiralling and spiralling out of control, and that will come home to roost at some stage, certainly within his presidency, because I think half of the tax receipts will be taken up by interest payments alone by 2028. So, and that'll be towards the end, and I suppose he can't get re-elected, so maybe he cares, maybe he doesn't care. I'm not entirely sure. But I think that how cheap our material sector is at the moment, being the second worst performing sector last year, probably offers a really good opportunity. And as you saw today with Paladin and Boss heading higher, even with a mildly disappointing production update from Paladin, they're still up 10%. So
yeah. Everybody listen to AusBiz, because all our clever guests have said this for a while. I know you have. I know Michael Gable, he tweeted almost I told you so, get in Paladin a while ago, and it's up 10% today. Could go further.
Yeah, I mean, we've had Advent pick 2023, we had Paladin, we sold it, and we've only had a small position in there, and then we've had the Uranium ETF for the year 2024 was a bit of a rough ride, but I mean this stock's been 100% higher, Paladin. Yeah. So and we're really looking at very cheap prices here, particularly if this thematic starts to play out, and if they just start to throw enormous amounts of money at it. So
yeah. All right, let's get to the drill, baby drill. He said that again yesterday. The winners here could be the likes of Worley, maybe. Yeah,
I think Worley's probably in a really good position. They're half energy transition, they're half existing oil and gas. They're in terms of like the size and scope of their operation is, I think most ASX investors would be genuinely surprised about. They're on every continent basically. I mean, apart from the poles, and they've got tens of thousands of employees all across the first world countries. So drill baby drill will mean there has to be infrastructure rollouts, whilst they still have that higher margin, green or energy transition thematic going on in the background, which will probably be more focused in Europe now rather than the US. Overall, it just means more work for them. So I would expect those guys to have a very filled order book for the foreseeable future. They bounced out of about $13 in December, but I don't think I'll be playing in the likes of Woodside or Santos, for instance. Keeping that energy cost down and keeping prices down is going to be the main objective of drill baby drills. So they're probably not going to benefit anywhere near as much. So
what did you make of Woodside? I think maybe Fortescue as well. Really joining this back down on some of the clean energy projects.
Well, Trump's pulled out of every arrangement known to man. The Paris Accord was always fairly ambitious, and I think it was poorly thought out in terms of how quickly we would be able to adapt. And the likes of Germany learnt their lesson, obviously, when Russia invaded Ukraine, and they had overcast conditions and no wind, and had to re-legalise coal. So this is always going to take us longer than we think. Things in economists and are very predictive, and they have modelling, but you can't obviously you can't predict the weather as well as we need to for those renewables, and the storage technology is not quite there yet. So yeah, I expect companies to be a bit more reasonable about it. Hydrogen obviously was the technology is to compete with oil. It needs to be about a quarter of the price, basically. And obviously, if drill baby drill brings oil prices down even further, and it's going to have to go lower again. So the technology's not quite there yet.
Yeah.
And it's probably more a 5 to 10 year runway. But it's very sunny in the Pilbara, and I can see where Andrew Forrest is coming from. You put down a lot of solar panels and ship compressed hydrogen into Asia. He makes a fairly useless patch of land very valuable twice.
Yeah.
So. But probably just a little bit too early.
Speaking of runways, I just want to pivot a little bit. Not sure if you saw the Qantas update, but just what you might be thinking about some of these travel stocks. Qantas reworking its loyalty program, so you need more points to book a flight, but in that sense, some of their flights are going to go up. The market's seeing Qantas up by 4%. Is there any sort of benefit in these companies sort of rewarding long-term?
The goalposts continually change, and realistically, I think making things more expensive doesn't necessarily drive customers towards you.
Yes.
It's not really, Qantas is not really a stock that we've been generally involved in. Happy to watch it go by. Corporate travel, I think, is very cheap at the moment. I think the rest of the travel stocks are fairly expensive relative. So. Obviously, if they can get that UK operation sorted out and get some more, get itself into an upgrade cycle. I mean, it's around about $14 now. I mean, it was trading well into the 20s a year and a half ago. So I can't see why it can't go back there once it gets through this this turmoil in the books.
All right, you catch all my left field questions. Thank you, Mark. As always, Mark Gardner there from MPC Markets. All right, well, the stock of the day, which we just discussed, was Paladin. Henry Jennings from Marcus Today and Andrew Weiland from DP Wealth Advisory joined our Andrew on the call.
This report was a positive. They seem to have sorted out some of the watering issues they have. They've reaffirmed guidance. The news was positive on the cash flows. It certainly, when you look at the numbers, they're on that production guidance, the revised one. What's it? 3 to 3.6 million pounds uranium oxide, best month of production to date. The other thing that they have done, of course, is they have now taken over and completed that deal with Fission, which gives them another leg up, and it means that it's not just dependent on Langer Heinrich in Namibia.
They're copping a bit of a bath today, given the 9% rise in the share price, but it's about 15% short. So it'd be one of the shorted companies on the ASX. So that would probably be the only thing that would give me pause. But again, to Henry's point, in any pullback, my rudimentary charting skills, which is awful, just to be frank with you, would be about $88.60 or thereabouts is probably the entry target. So thematics make sense, growth makes sense. It's probably just a little expensive on today's news. Wait for a pullback and just be mindful of that short interest. So it's a hold for the time being.
All right, let's have a look at the market leaders in a positive day today. We talked about these uranium players getting a big boost. So Boss, Paladin, Deep Yellow, all the top three. Lifestyle Communities also had a good session, as did Vault Minerals. To the downside today, Iluka came through with an update. Star Entertainment continues to be under pressure. Sigma Health, Centuria Capital and Alcoa also lower. In the small end of town, these are the stocks on your screen which did well. Seven West Media up 10%. And to the downside, in the small caps, MTM Critical Minerals off by 8%. COSOL was the laggard, down 14.5%. I did want to mention Qantas because I touched on it with Mark Gardner, and it's just to perhaps correct myself in what I said. They are making more frequent flyer points needed to secure classic reward seats, really changing their loyalty program. But it does look like the market likes it. Qantas shares were up 4% today. All right, tonight we get earnings from Johnson & Johnson, Procter & Gamble, among others. We've also got ECB President Lagarde speaking. Tomorrow we get more quarterly updates, including Santos, Fortescue and Netwealth. And Japan will come through with its trade balance for December. Don't forget as well that it's nearly up to our first event of 2025. January 30th is High Conviction, and it is a selection of the best ideas for this year across public and private markets. Mark Gardner from MPC Markets just told us he'll be there. We're going to have some of the country's top investors with their high conviction concepts, whether they be themes, strategies or individual stocks. Registration, of course, free. You can get all the details, ausbiz.co/conviction. A final check on where the market is tracking. We've finished higher by 0.4% there on the CBO 200. The ASX 200 has gained 28 points, or a third of 1%, a new 20-day high, I should say. 8,429 is where we sit, and of course the potential impacts on Canada and its uranium sector giving a lift to our uranium stocks. Boss and Paladin were the front runners on our market today. That does it for Wednesday here at AusBiz. We'll be back bright and early from 9:45 a.m. Eastern. We'll catch you tomorrow.